Hi everyone, and welcome to this second video working through some journal entries related to inventory. So let's hop over to the computer and get some practice doing inventory journal entries. In this problem, we have a company and they purchased inventory on account. And remember, on account means that we did not pay cash, or when I say we, I'm talking about the company. The company did not pay cash for the inventory. The supplier said, pay us later. That's what that on account means, right? So that we have an accounts payable. All right. A company purchased inventory on account for $250,000. Then the company returned $20,000 of the inventory to the supplier for credit. So essentially what happened is the company ordered product from their supplier, and they realized that some of the product that they ordered came to them from the supplier damaged, and they didn't want it. It was defective. And so they took that inventory and sent it back to the supplier and asked for a refund. And the amount that they sent back was the 20,000. They bought 250,000. They received the shipment in and they realized $20,000 of this shipment was defective and they sent it back and asked for a refund. Our job is to record the two journal entries, and the two journal entries relate to the initial purchase, which was 250,000, and then the $20,000 return. So I'm just going to change this text to red just so we remember what we're doing here. Oh, I made this one highlighted red. I don't want to do that. Let's change that back and make the text red. Okay. The problem says record the purchase of inventory on account and the purchase return, and we're going to assume we use a perpetual inventory system. So perpetual inventory system means that we are recording transactions and updating our inventory as well as our cost of goods sold. We're doing that in real time as the transaction happens, rather than waiting until the end of the period when we count our inventory to adjust our inventory and cost of goods sold. A periodic system, which is a system that is tracking inventory on a periodic basis, that is the system that would rely on a physical count of the inventory to come up with cost of goods sold and inventory. We're using a perpetual system. This is like the barcode system. In a perpetual system, you update things right away. And what that means for our journal entries is that we don't have this extra step that we have in the periodic system where we have to deal with a purchases account. All right. So perpetual system, you update things in real time. All right. So let's look at these journal entries. The first journal entry, and I'm just going to mark this entry 1, is a debit to inventory because we're buying inventory. Inventory is an asset. And to make the asset go up, we debit it. So this is 250. And a credit, I don't know why it made that bold, credit to accounts payable. Again, because it says on account, credit accounts payable for $250,000. And that takes care of that first part. The second part here is we have to record the return. So how do we record this return? Well, it's actually pretty easy in a perpetual system. All we're going to say is let's do the opposite of what we did here. Instead of debiting inventory, let's credit inventory. Instead of crediting accounts payable, let's debit accounts payable. So we will debit accounts payable and credit inventory. And this makes sense conceptually too, because if we return product to the customer, we no longer owe that, or I'm sorry, if we return product to the supplier, we no longer owe the supplier for the product that we returned. We send it back, we get a refund. So we need to make accounts payable go down. How do we make accounts payable go down? We debit it. And by the same token, we sent the product back, we sent the inventory back, and so it's no longer our inventory, which means inventory needs to go down. How do you make inventory go down? You credit it. So that's why we're debiting accounts payable and crediting inventory. Now I'm going to leave it up to you to fill in the amounts here. And I'd like for you to get the correct answer. Please comment under the video below and I will respond and tell you if you filled in the right amount for the second journal entry. All right, so this second video here, we did some more practice with inventory journal entries. I hope you found this video helpful. Thank you very much for watching. Take care.